Hey, what's going on, everybody? I hope you are well. We have an article out of CNBC today stating how mortgage demand jumps nearly 10% to start the year, even as interest rates tick up again. We're going to break this down and we'll review some of the key points, and we'll just try to figure out whether or not borrowers have just accepted higher interest rates as the new norm, or if maybe there's more to the story. We're going to jump right into it, but before we do, press that like button, consider subscribing. It helps grow and promote the channel, and I do appreciate your support. All right, so key points. The average contract 30-year fixed rate for a conforming loan, so conventional mortgage, anything that's under $726,200, it has increased to 6.81%. That's up about 0.25% from where we were just a week ago. Applications to refinance a home, this jumped 19% week on week, and they're 30% higher from where they were the same week last year. We're going to dig into these refinance applications more in just a minute. Purchase applications, they did rise about 6% on the week. That's a nice uptick, but keep in mind, this is already coming from low levels, and we're still down 16% on the year. So even though that's a nice little uptick, means homebuyer demand is increasing, there's still definitely some demand destruction at play here. Now let's go ahead and touch on mortgage refinance activity to really kind of try to figure out exactly what's going on here. So if you break down the total composition of all mortgage applications, the share of mortgage refinance activity has increased to about 38.3%. Now that's of the total applications, which means that just over 60% are going to be mortgage purchase applications. The refi activity has increased, but keep in mind, this is coming from a relatively low level as well. Roughly 90% of all existing mortgages are going to have rates that are under 6% at this point. So you have to ask yourself, why are people refinancing? In my view, there are really two reasons why a borrower may want to refinance. Of course, there's many other outliers here, but just speaking in general terms, borrowers typically want to either one, reduce their rate and lower their monthly payment, or two, they have equity in the property, they want to pull cash out and maybe accomplish some sort of debt consolidation and lower their overall monthly output of expenses. Now, if we take a look at this chart here, this shows the average 30-year fixed rate, and it's coming in at 6.81%. So we need to ask ourselves, if somebody wanted to reduce their rate and lower their monthly payment, would they be able to accomplish it, and by how much? And all we have to do is take a look at where we've been over the last 12 months or so to see if there would really be any benefit. And if you go back, let's say 6-8 months, mortgage rates were hovering right at about the same point that they are today. The outlier there is going into September, October, and November of 2023, where we saw mortgage rates touch about 8%. And my point being is that if you were a home buyer at any point leading up to about July in 2023, your mortgage rate is probably right at about the same rate it is today. Therefore, there really would be no benefit to that borrower to refinance because you couldn't really drop your rate. You wouldn't be able to lower your monthly payment. However, as we moved further into the year and mortgage rates touched that peak in October of 2023 at around 8%, if someone were to have bought within that 2-month window, well, now they may be in a position where they could reduce their rate and lower their monthly payment. But we know that purchase demand fell off a cliff. So very few borrowers are actually going to fall into this category. So what I believe might be going on, or at least the higher probability, is that the lion's share of refinance applications are going to be for cash out and debt consolidation. And unfortunately, I was unable to find any of this data. If you know where to find the cash out data, please leave me a comment below so I can take a look at it myself. But I believe that the majority of this refinance activity we're seeing, it could be utilized for something like debt consolidation, which means that homeowners are foregoing an already low mortgage rate to take a higher one in the hopes that they're going to be able to pay off maybe credit cards, car payments, student loans, things of that nature that are financed at higher rates and lower their overall monthly payment, which could be an indication that the consumer is feeling strained. Now, when it comes to mortgage purchase applications picking up about 6%, I think this is just a seasonal shift. Now we've gotten through the holidays. We've seen mortgage rates come down a little bit. Some of those home buyers are getting off the sidelines. They're coming back into the market. They're starting to shop. But anecdotally speaking, from the experience that I've seen in my market, home buyers are still being extremely extremely selective because affordability remains a major challenge and headwind in today's housing market. So what are you guys seeing out there? Do you think this jump in refinance activity is just folks trying to reduce their rate and lower their monthly payment, or is something else going on? And of course, if you know where to find that data, please let me know in comments below. And that's going to wrap it up for today's video. If you got any value out of this, press that like button, consider subscribing. It helps grow and promote the channel. I do appreciate your support. Take care.